I've been told I have 15 minutes, so I'll spend about 8-10 minutes talking about recurring payments, and that leaves us about 5 minutes for questions. Let me just make sure I know how this clicker works. Okay. Most consumers and businesses who know BillDesk tend to associate BillDesk with online and mobile payments across the bill payment and the e-commerce segments. But fact is, we also process what we call recurring payments, the topic that I will speak about. Given the misconception that in India, you can't do recurring payments, and I want to distinguish that from recurring billing, which we'll talk about later, I just thought I should first present credentials of why I'm standing up here and talking to you about it. Admittedly, the volume of recurring payments that BillDesk processes is a very small part of our overall payments platform. And when you compare it with the volume of online payments we would process, the recurring payments number is a very small one. Having said that, it's still about, last year we processed about 12,000 crores of GMV or TPV, if you will, of recurring payments in India. This is India domestic market, which is to say this is Indian consumers making payments to Indian businesses using an Indian bank or a card account. Nothing global about it, it's all Indian marketplace. So I'm going to use the next 2 or 3 slides to just talk of what do recurring payments mean, which is essentially meant to help people in the audience identify if the businesses that they involve in qualify for being categorized as a recurring payments company, and therefore should they look for recurring payment solutions. A lot of confusion arises from, let's say, an incomplete understanding of what the term recurring payments means. So I've started off with a very technical definition of what recurring payments are. Primarily, it refers to multiple transactions of a consumer which are processed at predetermined intervals from a known account of a consumer to make payments to a merchant. We'll go through each of the elements, the ones that I've highlighted in red, but broadly, this is the technical definition of what a recurring payments is. So we'll just look at each of those elements. First criteria, it means multiple payments that a consumer needs to make. So let me just give you an example and make a distinction between what is a recurring payment versus not. So if you were to buy, let's say, a smartphone from either an online store or a physical store, and where you as a consumer get an option to say that a phone worth 20,000, buy it using your credit card, and you can pay your bank over 10 or 12 easy payment methods, that is not a recurring payment. That is an installment payment. The criteria for a recurring payment is that you need to make multiple payments to the merchant, not your financial institution. So the moment you have what you would understand as an EMI scheme, that's a financial offering that your financial institution is giving you. It's not an offering of the merchant per se. So that's not what a recurring payment is. On the other hand, let's say if you bought an insurance policy, and you contracted with the insurer to say that you're going to cover my life and I'm going to pay premiums over the next 5 years, and you have an obligation to make these payments month on month for the next 60 months, those are recurring payments. Those are multiple payments that you need to make to the merchant. Just for the heck of it, the tricky one is when a bank gives you a loan and you start making payments to the bank. In that context, understand that your bank is the merchant there. The bank, in the capacity of a merchant, is selling you a loan, though it's your financial institution. But the loan repayment to a bank when you've taken a housing loan is again a recurring payment. Right? The idea is to understand that people who have sold you goods and services and to whom you need to make multiple payments over a period of time, that's what a recurring payment is. But the real true test of a recurring payment is that these have to be made at predetermined intervals. And that's the crux to what defines a recurring payment. At the time when you, let's say, technically enter into a contract for the goods or service that you're purchasing, you know at that point in time how many payments have to get made over what period of time. The only flexibility is potentially is whether it's a fixed amount or a variable amount. And again, let's continue with the insurance example. Let's say you've taken an insurance policy, coverage of 1 crore, and let's say the premium works out to 10,000 rupees a month to be paid over the next 5 years. Here, you have a contract with the insurance company where the day you sign up, you're covered for the life, but the obligation on your part is to make these 60 payments to the insurance company. So the full service is contracted for. The delivery of the insurance service, as it were, is over the 5-year period when your life is insured, and you need to make these payments over these 5 years. In such an example, you also know the amount of premium that you're going to pay, which is 10,000 rupees a month, so that's a fixed amount. So how would typically a process like that work? You buy the insurance policy, you sign up a piece of paper, and put out your bank or credit card number, and say, this is the account that I want debited or charged month on month, and the policy stays live, right? It meets all the criteria. Multiple payments that you need to make. It's a predetermined interval. Either you're making a monthly payment, quarterly payment, or annual payment. You know the card or bank account you're making it from, and you know the amount you're making it from. A slight variation, but another example of a recurring payment would be when, let's say you're paying your electricity bill. You've taken a house on lease. You're going to be there for 5 years. Your electricity provider, let's say Bescom in Bangalore, is giving you an electricity connection. You need to make month-on-month payments for the service that you're contracted, which is to say you're contracted to take electricity, so to speak, from Bescom. You need to make payments to them, multiple payments, month-on-month, predetermined interval. You could link either your card or bank account. The difference now is in the amount. That amount, unlike the insurance policy example here, would vary month-on-month because it's based on your consumption. But that too qualifies for recurring payment because it is, as I said, the multiple payments to merchant, predetermined intervals, and you're linking an account. If any of your running businesses or need to collect payments that kind of qualify on these 2 core parameters and those 3 variables, which are, that's what a recurring payment is. This, incidentally, is the last slide, so I'll go a bit of depth into each of these aspects of it. When we talk of recurring payments, in the Indian context, where does it typically work? And historically, and these are old products, we've been doing this for many years now. When consumers set up recurring payment instructions to make payments to providers who they're comfortable with, beyond all the, let's say, the technicality and the jargon of it, when do, from a consumer's perspective, when do consumers set up recurring payment instructions? When they're confident of the entity to whom they're making payments. Why does that happen? Because primarily, as a process, how do you set up a recurring payment instruction? You end up signing a piece of paper or in some format giving an authorization to some service provider. In the example of an insurance company or electricity company, you're giving a right to that entity to month-on-month or whatever, at periodical basis, debit your account without any further action on your part. Right? That first calls for a great degree of trust on that institution that they're going to charge you the right amount at the right time. And those are the key factors, and therefore, even if recurring payment solutions are available, recurring billing solutions are offered by many, the consumer chooses this, the primary determinant is the end choice. So recurring payments can be set up either on your bank account or your card account. You can choose to say that debit my bank account month on month for these payments, or you can say charge it to my credit card. From just an environment and regulatory perspective, 2 entities come into play. One is the set of card associations. When you really set up an instruction on your card account, you need to look at and consider the card association rules and guidelines. In an Indian context, when you look at setting up such an instruction on a bank account using the bank account number, then you need to look at the RBI set of guidelines. Recurring payments looks simple, but there's a great process behind it because you as a consumer, for example, just sign up a piece of paper, set up a rule to say, charge my account. But a whole lot goes at the back end to figure out that at the right time, at right intervals, your right bill is generated, the correct amount is validated, your bank account where the charge has to go is validated, and it's debited to that account. What do these 2 entities in the respective worlds of card and bank, what is the role that they play? They essentially set the rules by which these transactions can get processed, the criteria by which you identify what is a recurring payment versus not, the process by which you, if you're a business who's collecting payments from your consumers, what are the processes that you need to follow to ensure that you're offering a secure service? As an example, if you were to collect a subscription payment from your customer, if you are running a business that involves collecting monthly subscription payments from your consumers, you could offer a recurring payment service. And if you are offering it to consumers who are linking their bank account to it, one of the RBI guideline requirements is that you need the consumer to physically sign a piece of paper authorizing that debit. Because when as a business you go to the customer's bank and say, this consumer has authorized me to pull out money from his account, the bank needs to know that you have that right. And that right in the banking world is established pretty much like how they look at a check. And they say, this is signature matches the record, and therefore this is set up. What does it translate to in the world of online services? It means a physical leg is involved when you do this. So can you do this across 50 million customers? Is it scalable? Very realistically, it's not. Unless you're looking at it as a long-term business and you're saying, these are my vendors, I can sign up, these are customers, I will do this. But it involves a physical leg being able to reach out to the customer, getting the piece of paper. That's in the case of a bank account. Similarly, for a card account recurring payment, card associations like Visa, Master, Amex have their own rules of how you collect this first-time setup requirements. The key implication is, it comes from the next part of it, and where do these rules kick in? If ever a consumer were to dispute that he never gave you, the business, the right to charge the account, or disputes the amount that you charge, you as a business needs to be able to defend that charge of the customer. In which case, all these original requirements of the document, how you set up a customer, get called in. So what are the relevant aspects for you in the audience who are looking at it as a business proposition need to consider? One is, do you set up recurring payments on a card account or bank account? Very simply put, bank account, the only way you can do it today in India is by getting a physical piece of paper signed. On the card account, that's the ideal standard that is defined as that you require, that you get a customer to sign a piece of paper and give a photocopy of the card as proof that he genuinely owns the card. Because in the credit card world, there's really no signature that you can keep matching each time. Having said that, over a period of time, some of these standards and processes have got diluted, and there are online ways in which you can collect a recurring payment instruction over a card. So typically, if one looked at a recurring payment instruction on credit cards, it is possible to look at it as a pure online way of collecting the initial mandate setup. The core part, the key part for any business to consider when they start offering this is that the prerequisite for being able to offer recurring payments is having a system that allows you to do a recurring billing. Month on month, knowing what is it that you need to charge a customer, at what point do you want to charge a customer. All customers obviously don't get charged on the same day. You would have a cycle. So any customer who came in on the 14th of this month needs to get billed and charged on the 14th of next month. The guy who came on 20th needs to get charged on the 20th of next month. That needs a fairly robust billing system. Either you have it of your own, or there will be providers in the market from whom you can either buy these systems or use the platform on a pay-per-use basis. But what you do need is a robust billing system. What you would need is an even more fraud detection and dispute management system, because very often consumers who, let's say, do not like the service that you rendered or have a dispute, the easiest way for them to raise this issue is to dispute the payment and seek a refund, right? And at which point, in your own business interest, you're defending the payment that you collected, and you need to have good tracking mechanisms. The tracking mechanism needed here for the fraud and dispute management is not very different from what you would do in an online world, but you would still need that. One of the last point that I want to make in this set of aspects is that there is an Indian regulation of RBI which is not enforced, but there is a regulation RBI took out as a directive which says even recurring payments, card transaction in India need a second factor of authentication, pretty much like the online transaction. It's not a very well-known directive, and RBI has so far strictly not enforced it, primarily because as an industry the issues haven't come up. But be aware that there is such a guideline. And for businesses who are looking to leverage the recurring payments as an alternative to processing online payments, you should be careful of the fact that if you're looking at switching from online to recurring purely as a way to avoid the second factor, you may not well be able to avoid it going forward. What could change in this area? If somebody, look at the definition of recurring payments. It's a definition that's come up over time, set up by card associations. A small tweak in the definition could bring a whole set of other payments into the world of recurring payments, and that's potentially what could likely happen. As the world of internet connectivity, new business models come up, whole set of new payments which are in the gray area of are they online versus recurring need to be categorized someplace, and that's possibly the one key change that we'll see going forward. So that's all I have here, and if there are any questions.
Can I get the mic? Yeah. Thanks, Vasu. I think we're completely out of time, but there are a lot of questions here. I think I'll ask the one question that everybody has asked me about this, which is, if I'm a business doing a B2B service, like a software as a service play, and I want to charge my customer 1,000 rupees per month, and it's a fully online service, can I do a one-time 3D secure transaction, register that card, and then do an ongoing transaction? And second option is, since it's a business customer, it might be still okay, viable for me to go and take a paper signature. How does that change?
I think for that category, as long as the predetermined interval test is met, I personally think it is possible to look at the first transaction going to 3D secure and the subsequent things going to recurring payment. I think the crux is not so much on how to establish the first 3D secure. 3D secure is more to establish security comfort for you as a business. You could well choose to do it, let's say, purely on a Skype call for all that it mattered. The test of can you process the subsequent payments or recurring payments is that, do you know at the time of sign up of this customer at what intervals are you going to charge? If it's a discretionary, say, as and when he uses it, he could use it next month or 18 months later, that strictly speaking fails the test of recurring payments.
Okay. Second thing is, with all the prepaid wallets coming out, right, could this be a mechanism for people to systematically load, say, 500 rupees into a wallet every 2 weeks, for example? So you take a 3D secure transaction and set it up to be a 500 rupee recurring load every 2 weeks.
Absolutely. Just to take that, in the telco world, for example, people use this to pay their postpaid telecom bill, but nobody uses the recurring payments for recharge of a phone, primarily because they retain the optionality of saying, I will top it up whenever I want for whatever amount I want, it's not real. But if they got to a discipline saying, I want my phone recharged for X rupees at a Y interval, even that qualifies. So to that extent, even a mobile wallet, it would work.
Okay. Let's take one question from the audience. I think there was one in the front row.
Hi, Vasu. This is Sonam from WorldPay.
Yeah. I can hear you.
Vasu had a question around, have you been able to quantify, right? I mean, from the world of recurring payments, I mean, definitely it's, for me, if I'm a consumer, it really gives me the flexibility to pay a small amount, whatever I'm paying for example, buying a phone or a shoe. So if I'm paying something on a monthly basis, it really reduces my expenses, right? So have you been able to quantify what is the potential opportunity that Indian businesses selling, say, something like SaaS, right, on a monthly basis, they're losing out because of the fact that they have to have this thing called annual payments or on fixed payment mode?
So very quickly, we haven't quantified it, but both intuitively and just by having been in this area, it's a humongous opportunity. At the same time, it's not that people haven't tried that. I think the only caution I would notice, when businesses that are so tech-focused on tech services, they tend to underestimate the risk and the fraud potential of a recurring payments. I think that's the part they need to take care of. The mechanisms exist. If in-house one is not going to build the capability, it's always best to figure out solution providers who will handle that. But even in a domestic sense, that's an extremely large market.
Great. Thanks, Vasu. Thanks for that.
Thank you.
I think the takeaway I have for everyone is, recurring payments are indeed happening. Don't take your businesses overseas just because somebody told you that you can't do recurring payments in India. There is a tremendous opportunity, and if you would like to, Vasu will be around. You can ask him some more questions. Thank you.
Thank you.
This is from NASSCOM. Thank you.